to select an alias, and I was looking to have it because a lot of clients in Asia Pacific struggle to pronounce my name correctly, and now they are really happy calling me Akhil. So feel free to call me Akhil. I'm basically working as a domain architect in Microsoft Industry Solutions, which is one of the arm of Microsoft global businesses, centered, located in Asia Pacific. And prior to Microsoft, I have worked with some of the other Microsoft alliance partners, gold partners, and so on and so forth. And all the while in my IT career, I have been centered onto Microsoft. Microsoft Technologies used to be a .NET developer during 1.1, .NET 1.1 days, and then eventually moved on to the business applications space, writing software solutions for different industry verticals and horizontals on the different Dynamics versions, starting from CRM3 to CRM4 and so on and so forth, 2011, 2015, 16, and obviously Dynamics 365. So today's topic that I'm going to cover is basically something that may interest a lot of audience around here, which is basically corporate banking customer onboarding using Dynamics 365. We have had just now we had a very great presentation by Sulgari folks, and we saw the collaboration that they have built with VeryPark, and really created some great use cases around the all-channel communication framework. So I'll be touching upon how the different banking products have been built on top of Microsoft Dynamics 365, Power Platform, Azure Cloud, and how does that facilitate the different industry, financial industry segments, and then we'll bring the special focus onto the corporate banking. We know that when it comes to banking, generally we categorize the entire businesses into three larger verticals: retail, commercial, and corporate. While we will see quite a lot of use cases around retail, all of us are pretty much retail customers. We have salary accounts, we have personal wealth accounts, and whatnot. And we are pretty familiar onto how the retail users journey is, because we are ourselves users and we experience it day in, day out. But when it comes to corporate banking customers, probably only few of us who are basically maintaining the financial affairs of our own organization or that of our employers, then only we would understand how does it take the twist and turn when it comes to corporate banking, right? So just to give a background, what corporate banking is all about. Just to define it perhaps and put it into a strong bracket, many banks are bringing their corporate finance and business finance activities under the umbrella of corporate banking. So when I say corporate finance and business finance, this basically refers to the services that the banking world is rendering to their corporate customers. In other words, corporate banking deals with businesses across the spectrum. They can be the business banking that's rendered to a sole proprietor, probably to a LLC or an LLP, all the way to the multinationals, probably the Walmarts of this world, the Microsofts, the Googles, and whatnot, right? So all of those come into corporate banking bracket. The common types of corporate banking would include instruments like corporate finance, credit management, asset management, wealth management, cash management, loan and credit management, and obviously the growth management. So what we are going to look at is how Microsoft technology stack, Azure, Dynamics 365, and Power Platform basically links back, and we will try to basically establish as to how do we address and what are the capabilities that that stack has, and how does it all come together to cater to a corporate banking provider as well as the customer. We know that when we talk about the corporate banking relationship, things would start, or the customer journey would start from the point where they are basically getting onboarded, right? And that's the reason our focus in this session is basically about the client onboarding process, because corporate banking is a very huge vertical. The kind of services the corporate banks basically render, the kind of products they basically offer to their customers is pretty exhaustive, right? And the value is huge. The business processes are complex. The personas are too many of them, and we try to understand how it all comes together, right? But at the start of the spectrum, basically where we have the front office folks, where we have the relationship managers, where we have the the hunters, probably the sellers. How do they get their clientele, right? So imagine if tomorrow Walmart is coming to Singapore and they are planning to have for a conglomerate like Walmart, probably they would not just want to have one or two accounts. They would probably have a business potential to get probably 50 or 100 accounts at one go itself before even they start their operations in a new country or a new geography, right? So these kind of customers are pretty huge. The businesses that they bring onto the table is huge, and the amount of investment that's basically involved is also pretty huge, right? And that's the reason it all makes it a high gravitational or probably very bulky affair in terms of getting the customer on board, getting the things provisioned for them, getting them the bank accounts they are looking for, giving them the additional products and services that the bank has to offer to them, whether it may be the debit cards, whether it may be the credit cards, whether it may be the business internet banking or the corporate internet banking, which obviously is different from our own individual internet banking, right? So all of that needs to be provisioned, and all of that basically adds to the complexity in the client onboarding process, right? So if we have to jot down all of this into few of the different stages, I have got this illustration from PwC Financial Services department. And just to elaborate this illustration, the typical client onboarding for corporate banking basically gets scattered around into various stages. It starts all the way from identification, goes all the way to verification, and then screening, risk rating, and finally taking the onboarding decision whether the client is in or out, right? So after having done all of these 4 or 5 steps, or probably sometimes 6 or 7 or 10 steps, is still there can be situations where you may decide not to onboard a certain customer, right? Because there are a lot of different angles involved in terms of doing a check whether this is a genuine organization doing a genuine business across different countries, across different regions, and there is no anti-money laundering aspect or terrorist funding aspect or probably any kind of bogus business or smoke and mirror sort of scenario that's there, right? So all of that due diligence need to happen during the onboarding, and then only the onboarding decision happens, right? So everything that's laid down in front of you on a plate is not that you are going to eat if you are a corporate banking banker, right? So elaborating further, let's just talk about identification. What really happens when we say that we are identifying the customer better, right? There is a good amount of customer data collection that happens, and there is basically rules. There are basically compliance rules, regulatory rules attached with how you basically identify and how you basically establish your customer, right? Because we understand when it comes to companies, there are thousands of companies that get registered across the globe every single day, right? Or probably tens of thousands of them, right? We need to really understand as a corporate banker what is the structure of this company. So when I say structure, it is basically the ownership structure, right? Who are the people who are direct stakeholders? Who are the people who are basically the power of attorneys? Who are the people who are basically the shareholders? And all this goes down all the way to identifying something what is called as UBO, right? And UBO stands for ultimate beneficial owner, right? There are varied definitions that you would find on internet in terms of who an ultimate beneficial owner is. But in a layman's term, a UBO or a beneficiary owner is basically someone who has 25% or more shareholding in an organization, right? It may be direct shareholding, it may be direct plus indirect put together, but if it is beyond 25% in the organization, then probably we consider the person as the ultimate beneficiary owner. Now there is one more angle attached to it, right? If let's say we have an organization which has got 25% or more stake in this company that we are trying to onboard, and then there is an individual who has got a similar kind of a stake, then who is the beneficial owner? So there is this concept of natural person and legal person. Natural person is the person in flesh and breath like you and me, whereas legal person basically pertains to another organization, right? So a UBO needs to be the the person in flesh and breath, that means the natural person, right? So that's another angle. So ultimately, when we are saying that we are going to onboard a customer, we have to establish that who is the person in flesh and breath, or the natural person who has got an ownership which is considerable enough so that we can call him as the beneficial owner, right? Now, all of this may sound a little simple the way I'm trying to articulate it, but really when it comes to shareholding of large conglomerate organizations, it is pretty clumsy, right? Because organizations are not just organization or one registered business. They are probably there are subsidiaries, there are stakes, there are parent organization, child organization, brother and sister concerns, and so on and so forth, right? And all of that put together makes the shareholding pattern for your organization. So understanding this structure, establishing this in your CRM or your onboarding system is very crucial, and that's basically all related with the identification. So once you have identified a business, whether it's a legitimate business and it has got no complex structure, or even if it's complex structure, there is enough amount of excuse me, there is enough amount of transparency in the way the structure is established. Once you have done that, that's when you go on to do the verification, because at the time of identification, you would have collected good amount of firmographic related documents as well as demographic related documents related to the shareholders, power of attorneys, ultimate beneficiary owners, and so on and so forth, right? So with all that documentation, you have to do the cross verification whether all of that is genuine. You have things like going back to the ministries of commerce in different geographies, or probably the country where your bank is established, probably the Reserve Bank, or probably the central bank, or the regulatory, the commercial registration authority, to check whether the shareholding pattern or the structure that has been provided to you by the organization, the board resolution and everything matches with the document that's available with the public authorities, right? So all of that verification comes into picture. Now, once that verification is done and we know that we have the information about all the natural persons and legal person, that's where we do the screening. And this screening basically talks about identifying each and every individual and each and every business for something that is called as PEP or REP. PEP would stand for politically exposed person. REP would stand for reputationally exposed person, right? So these are two important tags that we have to attach with each and every shareholder or each and every element in the structure, to say or to probably find out whether everyone who is associated in the structure is not a PEP or is not a reputationally exposed person. So the good example for a politically exposed person is that, let's say you are trying to onboard a business for whom one of the director happens to be the member of parliament in the country where he lives, right? So in that case, this business really becomes a risky business for us to deal with, right? Because there can be political downturns, upturns, and those kind of scenarios, and that may impact this individual and indirectly impact the business that we are trying to onboard, right? So we need to know as a bank that when we would be establishing the relationship, when we will be associating our affairs, our stakes with this organization, tomorrow any kind of political turmoil or political downturn or upturn is not going to impact our reputation as the bank. So that's the reason we have to be careful about the PEPs. Reputationally exposed persons are basically organizations or individuals who have had bankruptcy or probably any kind of criminal proceedings pending or had been historically went against them. Those kind of things we have to basically care about when we are screening the different people in this structure, right? Because all of that, as it's visible in the content, is a reputational risk for the bank itself, right? So once we have kind of crossed those hurdles of PEPs and REPs, that's when we try to do the risk rating, right? So risk classification, whether the business that we are trying to onboard is a low risk business, a medium risk business, or a high risk business. What is the industry that they belong to? Are they dealing into arms and ammunitions? Are they dealing into contrabands? Are they dealing into medicines? Are they dealing into vaccines? Are they dealing into medical equipments? Are they dealing into defense equipments, and so on and so forth, right? So there are, or probably precious metals, mining, coal, a lot of different things, oil and gas. There are different kind of risks associated with different kind of businesses, and all that has to be taken into account and put together. When we put all these pieces together in the overall formula or the algorithm, and we get a risk rating saying that based on the parameters that we care about as the bank, here is the risk rating that we can attach with this business and the individuals that are related to this business, right? So finally, when we have done all this heavy lifting, that's when the onboarding decision happens. And I would just like to tell you that while this kind of seems little linear, this is not linear. Certainly, this is kind of having different kind of variations, because sometimes the rating may sound high, but when we do the due diligence, and by due diligence, I mean there are two levels of due diligence. One is the obvious customer due diligence, which we kind of attach with every single customer. And then there is enhanced due diligence, or EDD, that we attach with high risk customers, wherein we say that, okay, we know that this customer is dealing with an industry which is high risk, but the kind of wealth that they are trying to bring, or the kind of investment that they are trying to bring to our bank, is quite crucial for us. And that's the reason we will do enhanced due diligence. And after we are pretty convinced that they are a safe business to deal with and our reputation will not be at stake, that's when we take the decision to onboard them, right? So there can be variations that either it can go linear just via the CDD, or probably take a turn and go through the EDD route, or probably the territory manager's approval route, or the regional manager's approval route, or probably all the way to the CFO or the CEO's approval, right? So banks basically have all those business processes built on their onboarding systems. Even if they are dealing with these things on pen and paper, they have to do all of these things. But when we are talking about bringing out a solution to deal with these kind of onboarding processes, we have to make sure that the application suite that we are trying to position has got the flexibility to build not just linear business processes, but parallel business processes, or the business processes with branches and loops. All right, now we talked about the process. Now we understood that we are talking about very intense industry, very complex industry, very complex processes. So certainly there will be cost and time associated with this, right? So all of this has impact on our budget when we are trying to onboard a customer, when we are trying to basically win a customer, right? And how we can probably have zoom into all these factors, right? So I have got some statistics which has been prepared by an organization called ARCNIS, and ARCNIS basically are themselves an AML provider organization, right? So they have got suites, they have got solutions that basically deal with AML part of things, and by AML I mean anti-money laundering, right? So why this is important is because some of the times individuals go ahead and establish businesses which are bogus businesses, and they are just doing the siphoning of funds from one destination to another, and they are converting the black money or the illegal money into white money, right? And AML is basically the sub industry that basically deals with doing the due diligence around all of this, right? Anti-money laundering and counter-terrorist funding, which is AML CTF, right? So ARCNIS is basically an organization that specializes in anti-money laundering and CFT, the counter-terrorist funding, right? So what they have come up with, and this is based on the surveys that they have done, this is based on the studies that they have done in the market. They understand that the onboarding request, the document gathering, the background verification, the credit terms setup, agreement management, account setup, the tracking and data archiving, and the analytics and cross-selling, all of this has got huge amount of time and cost associated with this. So if we have to quantify it up to a certain extent, we understand that for onboarding request, generally the time frame that we can look at to cater to onboarding request can span somewhere from 3 weeks to 6 weeks, and sometimes it goes even beyond that, right? And this typically ties back to what kind of customer we are onboarding, the low risk customer, the medium risk customer, or the high risk customer. The more is the risk associated with the customer, the more the turnaround time increases. And the reason is because you have to do more and more due diligence, right? So not just basic customer due diligence, but you have to go that extra route go through that, all those world checks, Factivas, Interpol reports, Google reports, and whatnot to understand the PEPs, the REPs, and so on and so forth, right? So the more the risk, more the turnaround time, right? So typically, if we have to average out the turnaround time for onboarding request catering, it is typically ranges somewhere between 3 to 6 weeks for corporate banking, right? And the cost that is associated to do all this is basically somewhere around 2000 USD to 5000 USD. Now, these are numbers which are basically averaged out based on the surveys that ARCNIS has done. But this may vary depending upon which part of the world you are operating in, how are the wages of your investment bankers over there, and how are the packages that you have brought to consume the APIs for these third party verifiers or the AML organizations, right? So this all onboarding cost that is associated may be different based on the bank or based on the geography or the clientele that you are associating the onboarding with. Similarly, for document gathering, the typical process that happens is 1 to 4 weeks, and the reason is that so far there have not been a lot of different ways in which we can get the documents, because a lot of places the regulatory compliance want the documents to be a self-attested copy with the wet signatures and so on and so forth, which means typically someone has to go and collect the documents from the customers, right? Now, we are slowly doing away with that, and especially in the COVID situation, we have found that almost 60% of the businesses who are into corporate banking business have moved on from physical document collection to online document collection. And the regulatory authorities are also understanding the need for it, and they are allowing more and more banks and more regions to basically have the soft copies or probably the DocuSign signed copies of the documents to be accepted as part of the onboarding cycle. So this time is shrinking, but still because we don't have the straight through process and niche systems catering to all this, so still there is this area is a challenge. Similarly, when we are talking about background verification, it typically ranges from 2 to 4 weeks because a lot of processes are manual. Usually when it goes to operations, they will run the risk check, they will run the name checks or the name screening into various different sources, into Factiva, into WorldCheck, into Interpol, and it typically depends upon the checklist of the individual bank as to what all tools, what all services they are going to utilize, and which all places basically they are going to search for this customer's name appearing in good or bad news, right? So all of that put together consumes almost 2 to 4 weeks of time and around $1,000 to $5,000 of expense if there are any physical verifications also involved. And obviously for rest of the different phases, also for credit term setup, we have some 1 to 3 weeks of time for agreement management. Similarly, because agreement basically has multiple iterations, multiple change of clauses, going in multiple legal clearances. That's the reason the agreement management also typically ranges from somewhere from 1 to 3 weeks. And looking at the manpower that is involved, the daily wages and everything put together, it's again a costly affair. And finally, when we have the agreement signed with the customer, we have to do the account setup. We have to basically understand which products and services we are associating or offering to the customer, current accounts, saving accounts, internet banking accounts. If there are internet banking, how many different users are going to use it? Who are these users? Whether there will be maker checker concept, all that basically provisioning need to happen in the internet banking system. And because the footprint is going to be showcased in different places, like you will have the core banking system, you will have the customer or the CID system where you maintain the customer golden source of data. You have got the accounting system, maybe Avalok based or Temenos T24 based. Everywhere you have to talk through all these line of business applications which are dealt by different departments, by operations department, the middle office, by compliance department, by back office department, by IT teams, and so on and so forth. That's the reason account setup also takes its own sweet time. And obviously, when it is about tracking the daily transactions, the monthly transactions, doing the data archiving, the document management, document vault management, all of that also takes time. And finally, when it is about gathering good data about the transactional or the behavioral pattern of this customer, and then basing what is the next best action, as our Solgari folks were earlier showing in the very park screen, we had a little snippet about the next best action or the upsell cross-sell opportunities that we have associated. All of that put together also has got cost and time associated with this, right? So what does this all bring us to? So we know that the big fours and the consulting firms out there are always studying their own the different industries. And this is a study from Deloitte, where they basically say that a bank will have to spend as much as $20,000 to $20,000 to $30,000 to onboard a new client. Imagine the kind of money we are talking about. In a retail customer scenario, we cannot even think of spending that much of money for grabbing one single customer, right? Unless they are like HNIs or high net worth individuals, where we know that in the first touch point itself, they are going to park probably 20-30 million dollars. Then probably we can think of investing 20-30,000 in their onboarding effort. But for a simple retail customer or a salaried customer, probably this is not the amount that we will be looking to invest. But for corporate banking, this is the usual norm. And this is what banks usually incur on onboarding a new customer. And they have a race against they have a race against all the different competitors. They are brushing shoulders with each other to grab these strategic customers, and that's the reason no one really bothers about this money. But obviously, when it comes to optimizing this at a larger scale, everyone is looking to optimize these numbers to lesser and lesser amount, right? Okay. Now, we understood that what the onboarding process is all about. We understood where are the bottlenecks, where are the challenges, what are the typical on the ground challenges that are associated, and what are the cost and the time frame associated. Now we have another study which is co-produced by Cognizant and Deloitte, and this is where they talk about which particular components or phases in the business in the onboarding process that can be refined, or probably they can be sophisticated further in terms of automation, right? So this is all about which all blocks can be automated seamlessly so that this client onboarding process shrinks down to a lesser number of days or weeks and incurs lesser number of costs, right? So what you see on the screen is basically the green and the blue boxes, which basically talk about which all places we can have the automated CRM systems or the client onboarding systems, and which are the places where we can have the robotic process automation, which is the talk in the town these days. We have all the different players. We have UiPath, we have Blue Prism, we have Crayon, and last but not the least, we also have the strong Microsoft Power Platform, which with its RPA capabilities, with Power Automate Desktop as well. So where all that basically fits in, right? So the blue blocks are basically the candidates which are good for RPA automation, whereas the green ones are where we can build the business processes on top of a CRM or an ERP system, right? On probably a customer engagement system or a CDP system, the customer data platform. So soliciting of client prospect is basically something which is about the hunter's job, wherein they understand that who are my good prospects out there in the town, and who are the people whom I have to reach out to, right? So once that client prospect is confirmed, that's where we begin the new onboarding request. And this is where the automation comes into picture. After onboarding request has been initiated, then we enrich that request with all the different blocks that we saw on the previous screens. We manage new requests for existing clients. Now, there is something noteworthy. When it comes to expanding your business or clocking more and more revenue, it is not just the new to bank or the NTB customers that we are talking about. Rather, we also have someone that is called as ETB or existing to bank, right? Because conglomerates have the tendency to expand their operations, bring in new arms of their business in the town. And that's the reason we already have more and more opportunities coming from your existing customers, right? So as they say that your best prospect are basically your existing customers, that proverb basically applies here as well in the banking, in the corporate banking as well, wherein more current accounts, more saving accounts, more fixed deposits, more internet banking, more and more debit cards, credit cards, they can be associated with the existing customer, right? So all of that needs to be taken care by your CRM or the onboarding system as well. Similarly, when it comes to document gathering, the area where we see the refinement scope is basically, as I said, integration with all those signature providers like DocuSign or SignDoc and all. so that we can send the soft copies over to the customers over the email or over notifications, and then they can do the digital signatures and send the documents back, rather than the investment banker flying all over to the world, where probably the CEO of the customer organization is on a yacht, perhaps on the east coast of the US, and our investment banker is flying all the way from Singapore just to get a couple of signatures or probably a bunch of signatures from all these stakeholders, right? So to cut short all these operational expenses to grab the customer, we can have the digital signature kind of mechanism built in our onboarding cycle. Similarly, when it comes to background verification, as I said, today what happens is that when you get the structure, the front office passes this company structure, the complex company structure, to the operations department, to the compliance department, and then they start the name screening, the background verification, the CDD sort of processes. And until now, the business practice was to basically do everything manually. Like you will be having a login account for the Interpol, you will be having a login account created for the ops people in Factiva, in WorldCheck, in Google, and everywhere. And then basically they log into individual systems, they use Excel sheets, they do the name check, screening and everything, and then they record all their results into Excel. And finally, they pass it back in form of documents, and probably the facilitators who are basically the support staff or the relationship manager has the duty to do all that stale information putting into the system of records, right? Rather than that, when RPA is basically when it comes and joins the bandwagon, how it helps is basically you pass on some parameters to the bot, and the bot starts doing the job instead of the person doing this mundane job of finding the name appearing in all the different name lists, right? So it can be attended bot, it can be unattended bot, depending upon what is the philosophy that's being allowed in the region or the geography you are operating in, and what is the philosophy that you as a bank want to adopt, because there is always this notion of cutting the manual workforce and going to bot, and there is always a resistance in the policymakers' mind saying that it should not result into joblessness for people. That's the reason some of the time there is always a call between attended and unattended bots, right? So with all of that, whether it is attended or unattended, there is always a good scope of having the robotic process automation built for all the background verification, name screening, CTT and EDT kind of mundane processes, right? And then obviously we have the scope of refinement or automation on the credit term setup, on agreement management, tracking data and archiving data, and obviously on analytics and cross-selling, right? So when it comes to analytics and cross-selling, we know out there we have the data CDPs like customer insights, we have NG data, and we have Salesforce Einstein-based CDPs and so on and so forth, right? So all of that basically, and the philosophy really is to get all the touch points covered into one common platform, whether the touch point has been through multiple channels or multiple different departments, whether it was a touch point from your service angle or from your sales angle, all of that should bunch together and form the next best action on your customer 360 or on your customer insights. All right, so with that, the final word on what is it, why is it that we think it is important to target this segment of the industry to digitalize. So if we look at an excerpt from a advisory manager of financial services from PwC Germany, what he opines is that digitalizing onboarding process for corporate customers offers enormous saving potential for banks, and that's the single best reason for them to look for solutions to digitalize their onboarding processes, right? Similarly, if we talk about some of the studies that has been done in the Middle East, Emirates NBD basically reports that, and this is a report from 27th April 2020, that means quite recent, it's just been from the last year, that Emirates NBD reports 60% growth in corporate digital onboarding. That means banks have already realized that they need to refine the corporate digital onboarding processes, and they are working more and more towards it, right? In this region also, with all the different Microsoft partners, I'm going to take those names also because some of them have really done some great job doing sophistication of business process on corporate digital onboarding for all the different banks here in the APAC region as well. So we have seen all these trends in APAC, in EMEA, in Americas, and so on and so forth, right? So everywhere across the globe, corporate bankers are basically embracing the digital onboarding solutions. And last but not the least, we have got a COO financial services series that came out sometimes last year, where basically there were a series of different articles that came out as thought leadership. And that's where they kind of express that the transformation of corporate and investment banking onboarding is the talk in the town. And it is the top of mind issue for many corporate and investment banking executives to do the transformation of their client onboarding systems. And the pandemic has really accelerated this thought furthermore, right? So that has also kind of put that level of urgency or the degree of urgency to this wish that the corporate bankers were already having in their minds, right? So they have expedited to take fast steps towards this. Now we have talked about why is it required. What are the situations? What is the on-ground reality which basically needs us to have digitalizing of the client onboarding? But we have to talk about our bread and butter, right? So how does Dynamics 365 and Power Platform can help in this area, right? Because we have seen quite a few different solutions where our partners and our customers are talking about digitalizing the retail customer journey into Dynamics and Power Platform and Azure. But does this technology stack also fit the corporate banking industry? I would say yes, absolutely it does. And I will show you the evidences also as to how our partners and customers have been pretty successful in not only digitalizing the corporate banking segment, but also digitalizing their entire bank on our technology stack. May it be corporate banking, may it be commercial banking or business banking, which is about small and medium business segment, or perhaps to the retail customers also. So same solution stack, centralized framework has been extended to the different segments of the banking industry, right, including corporate banking. But today's conversation will focus on how Dynamics 365 and Power Platform can help the corporate bankers to have end-to-end client onboarding or customer 360 or probably the mortgage banker or investment bankers enterprise mobility app built on top of technology stack, right? So what you see on your screen is basically something that you may be very familiar with, and this is our common data model, right? So this common data model is not just which is pan Microsoft, but it's pan industry. This also has got the due diligence to do the handshake with some of our partner organizations, some of our collaborating organizations like Adobe, like SAP, and so on and so forth, right? So this common data model is a philosophy that has been evolving and has been pretty mature has become pretty mature in last few years. And what you see on your screen is all the different functions, whether they are from the front office, middle office, or back office, that the common data model is basically addressing. So you have got accounts, you have got appointments, contacts, phone calls, owner, and so on and so forth. You have the sales side of things in the common data model. You have competitors, you have discounts, invoices, opportunities. On the service side, you have the cases, the contacts, the resources, the tasks, and so on and so forth. On the marketing side, you have campaigns, events, marketing, email, marketing page, and so on and so forth, right? I can go on and on and on because for all the different modules or the business areas, the common data model has got some kind of a structure already built. But if we talk about which all industries this common data model applies, it kind of not only applies to banking and financial services, but it also applies to automotive, the medical or the healthcare industry. It applies to the higher education, the universities, the polys, and the colleges industry. It applies to the non-profit industry. And last but not the least, to suffice to all of this, we have a bunch of insight or a couple of insight applications in terms of customer insights, sales insights, product insights, and so on, right? So all of that put together is part of the common data model. If we talk about accelerators, in last 2 or 3 years, Microsoft came up with industry accelerators to target all these industry verticals, right? So we have got industry accelerator for automotive, for banking, for medical record, for higher education, and for non-profit. And some of you who may be on top of all the news and all the talk in the town that is happening around what is next from Microsoft, what is the next that is coming up. And if you are hearing leaders like Bill Borden and all from the financial services segment in Microsoft, you would have heard about the financial services cloud, right? So what is started with industry accelerators for automotive, banking, healthcare, higher education, and non-profit has now started taking shape of industry solutions, right? So while accelerators were free offerings that you were able to download as a partner or a customer, you were able to download them freely from App Source, and that would have given you a grab of the background source code, all the different database constructs, all the different programming constructs, as well as the managed and the unmanaged solutions that need to come and sit as part of your solution. All of that were available in App Source as well as the source code in GitHub, right? But now that Microsoft is itself venturing into refining a specific industry, uh, some of these accelerators are kind of getting phased out, and they are taking the shape of industry cloud itself, right? And that's basically where the manufacturing, Microsoft Cloud for manufacturing, Microsoft Cloud for finance, and Microsoft Cloud for healthcare come into picture, right? So while some of them are still behind the wheels, you would have heard in the last release wave we talked about the financial cloud, and Bill Borden kind of briefed the floor about what is the outlook about the financial services cloud. There is going to be a general availability soon, and keep your fingers on the pulse of all the news. You will soon get to know as to which of these accelerators are taking the shape of the cloud solutions directly from Microsoft. But if we have to let this conversation remain with accelerators, they are pretty much still there on App Source, but just for automotive, healthcare, higher education, and non-profit. Whereas if you try to dig App Source for banking accelerator, it's no more there because now it has kind of taken the industry cloud route. But you don't have to get discouraged about it because it's pretty much available on GitHub. Everything, all the components, all the constructs are available in GitHub. So you still can get the source code, you still can get all the schema information, you still can get all the collaterals in terms of handholding, like how to deal with the accelerator and how to build the solution for your customers if you are a partner, or for yourself if you are a customer on top of one of these accelerators, right? So we talked about what comes out of box in the common data model. Now let's talk about giving some industry flavor or subject matter expertise flavor to this. So we will get something, we'll get some entities, we'll get some database tables, we'll get some relationships, some attributes, some best practices, some business processes, some pre-built model-driven and Canvas apps. But how do we take it to the next level? Because banks have their own ways of operating, right? So they will have their own set of data model, their own set of data structure, right? So some of the common data structure that as part of my digital transformation project experiences I have come across is that these are some of the high level containers that the banks look to build when they are devising a corporate banking solution, right? So you obviously have your B2B customers, you have the bank accounts, you have the different addresses that are associated with your customers. These can be home addresses, office addresses, power of attorneys addresses, correspondence addresses, and so on and so forth, right? Obviously, you will have upsell, cross-sell opportunities that would be associated. We have something that is called as account plan, where basically the investment bankers do the business planning as to what are the best set of products and services I should position to this customer, right? So it is what we call in marketing world as STP, segmentation, targeting, and positioning. Basically, all of that is put together and given the shape in form of a container called account plan, right? We also talk about complex structure of our customers in corporate banking world. So when we are talking about complex structure, that means there will be multiple different customers within a customer, right? And that is where our customer to customer relationship comes into picture, right? So imagine if you are onboarding a customer whose CEO is a high net worth individual, and he happens to be an individual customer also to your wealth banking business, right? So now he has got two capacity. One, he is a direct account holder of saving account or a wealth account or a FD account in your wealth banking business. And for that reason, his centralized CID or the customer ID is present in your core banking customer database. But now he is coming to you in a different role, which is basically being the CEO of his business, which you are trying to onboard for the corporate banking affairs, right? So now you have got two relationships, and that is where customer to customer relationship comes into picture, right? So while in this case, the CEO's organization is our customer, the CEO himself is also our customer, and perhaps his spouse is also our customer, and his children are also our power of attorneys, and his brother-in-law is also your customer, and probably his other partner is also your salaried account owner, and so on and so forth, right? So all of that makes it a complex web of people who have multi-dimensional opportunity or relationship with your bank. And that's where the C2C web basically comes into picture. So when you are ascertaining that how this structure is basically influencing the shareholding or ultimate beneficiary owner ascertaining for this customer, that's where you need to have a full visibility of the C2C structure, right? And because these customers will be having multiple bank accounts with you, multiple FD account, multiple portfolios with you, you need to have the C2A relationship also. So what is called as customer to account relationship, if you look at from the other side of the hourglass, it's basically account to customer relationship also. Now imagine an application suite needs to be how robust that it has to give you a 360-degree view of this entire gamut of things, right? You have multiple different individuals at multiple different levels. You have multiple different organizations who are stakeholders to this organization. And at the end of the day, you need to have the visibility of all the relationships that these people are holding with your bank or probably with some of your peer banks, because you need to understand how they are transacting in this world, right? To have a clear-cut transparency of their financial affairs. Now, I would just give you a hint as to how all of this is facilitated in Dynamics, right? In Dynamics, we have got something called as connections, right? And you must be pretty familiar with it. It's an old concept. We have been carrying it all the way from CRM 2011 and so on and so forth, right? Connections, right? Earlier, we had relationships and connections. Now it's pretty much all centered around connections, where you have connected from, connected to, right? We typically leverage this connected from and connected to, and that's where we have different kind of entities contributing as from role and to role. And that's how we build this complex web of affairs between C2C and C2A sort of things, right? So unless an application suite or a data structure has got a strong data structure like connection roles, you cannot do justice with your requirement around C2C and C2A, right? And that's the reason, that's where Microsoft Dynamics takes an edge to its peers when it comes to having the good corporate banking solution built on top of a commercial off-the-shelf product, right? So with that, I'll just quickly cover rest of it because, as I said, this is an intense and very in-depth topic, and I don't want to do injustice to any part of this onboarding process. So other than these kind of dimensions, we will also have dimensions like multiple phone calls, emails, and credentials attached with these customers. We also needs to ascertain where is the source of wealth, right? Customer is trying to park a lot of investment with us, but what is the source of this investment? Where is this investment coming from? Is it something that's basically part of their profit? It's basically part of the sale of their assets, sale of their precious goods, or what is really the source of wealth that they are trying to park as investment in your corporate banking affairs, right? What is the source of funds, right? So it is different from source of wealth. Source of wealth can be probably the hereditary or the wealth that you have inherited from your parents or your ancestors. But source of funds is basically what is it that you are funding to your bank account, right? You may have an enormous amount of wealth. I need to know that from due diligence point of view, right? But what you are really investing with us, that also I need to know. The fund source or source of fund is something that I need to capture in the customer 360 for corporate banking customers, right? Periodically, depending upon whether you are a high, medium, or low risk customer, I need to do the eKYC. I need to maintain your portfolio. I need to associate multiple products and services. These may be current and saving accounts. These may be business internet banking accounts. These may be debit cards. These may be credit cards. And then obviously I have to associate a huge army of individuals to deal with this customer, right? So when we are trying to win this customer, there will be a deal team that will be associated. When we have this customer onboarded, we will have an account team that will be associated. We will have appointments strike with these customers. We will have email exchanges. We'll have phone call conversations. We'll have events organized for them, and we will be running marketing campaigns for them. Now, a product suite which basically has all of these capabilities is the right product or the application stack for corporate banking customer. And that's why we claim that Dynamics with all its nuts and bolts is basically the right platform, right? So we have dynamic marketing, you have Dynamics 365 service. We already talked about the multi-channel banking customer catering scenario via Solgari, who are basically giving you the multi-channel call center framework, right? Or the omni-channel interaction with the customer. And we have Verypark, who has built the accelerator or sophisticated the banking accelerator and build a very niche solution for all the different segments of banking customers. Now, as I said, do we start with a blank slate? We said that, okay, Dynamics fits the purpose, Power Platform fits the purpose, Azure fits the purpose. But where do we start? Do we just go ahead, buy the COTS product, buy the license as a bank and start building from scratch? No, that's where we say that at least take the launch pad as the financial services accelerator, or probably go with one of the partner solutions or Microsoft solution itself. Maybe go with Verypark, maybe go with Power Objects, maybe go with Wealth Dynamics. All of these customers or partners that I'm basically talking about have really produced very nice niche products for this industry, right? And I have listed their names down in the slide. So I'll talk briefly about what all the capabilities these all providers are giving you. But at the minimum, you can go with the financial service accelerator if you have a huge army of in-house teams, and then you can build things on top of the financial services accelerator. Or if you have to take the make versus buy decision instead of doing all the heavy lifting yourself, as I said, go with one of the partner solution with Verypark, with Power Objects, with EY, or probably with Wealth Dynamics. Right. So corporate banking business process flow can be built on top of deal or opportunity, prospect or lead cycle, and eKYC and everything can be intrinsically part of all of this. And in the Power community, we also have an upcoming Dataverse Summit where I am going to delve very deeper into all the length and breadth of the capability that Financial Services Accelerator basically provides you. So obviously, we were talking about analytics. So you have the in-app analytics in forms of charts and dashboards that our partners have leveraged and our customers can leverage. And obviously, then you have the seamless integration with Power BI to have enterprise analytics built on top of your corporate banking solution. Right. As I said, who are the major players out there who have done really great job, and they have kind of grab the North Star, are basically Verypark. When it comes to Verypark, they have very focused banking solution built on top of Azure Dynamics 365 and Power Platform. We have HCL Power Objects who have got a noun attached to their product, and they call it Powered Banking, which is basically built on top of Financial Services Accelerator, but they have made good use of Power Apps Component Framework, Power Platform, Canvas, and model-driven apps, and obviously leveraged good amount of AI ML capabilities that come from the Azure side of things, right? And then obviously when it comes to wealth banking customers, we have got a very niche player called Wealth Dynamics who have tasted enormous amount of success in Europe, in the UK, and in the Americas, and a couple of years back, or probably 2 to 3 years back, they have ventured into APAC market, and they have tasted good success in this part of the globe as well. And the solution that they have got is a focused solution targeting the wealth banking space with intelligent product suite. So with that, I will give a pause to my surname, and if there are any queries, any questions, feel free to ask. I'll try my best to address those.
Well, thank you, Akhil. That was very, very comprehensive. You covered a lot of ground there. I think you've actually educated a lot of the community attending today about the cycle of financial services. In fact, a lot of what you talked about resonated on one of the earlier financial services projects I worked on, where it was a financial services provider that just literally got granted its banking license, and they were trying to adopt more of a banking approach than simply as a loan vendor approach. And all the concepts you covered actually is exactly what they were trying to implement as part of their account management. So thank you for really tackling that from a real world perspective. So thank you, Akhil. I'm just looking at the questions to see if there are any questions. I can't see any questions. I think mainly because for most people attending, this is actually news and knowledge that they can use on their projects, right?
Yes, absolutely.
Yeah, so I think that insight into the processes, the relationship management, which you covered really in good depth, I really like that, because for banking, it is all about relationships and empowering your staff to leverage those relationships in banking heavily, whether it's existing customers, which you rightly mentioned is where the main source of business is, definitely from the main existing customer base, and how they can leverage that based on the different relationships that exist. So thank you for really addressing that as well. And so I can't see any other questions, Akhil. I know you made an announcement. It was an announcement that was made yesterday, and I think if you could kind of finish off on that announcement related to the financial service cloud. I know it's only yesterday it's become a public announcement, but do you have any final words to mention about that financial service cloud?
Yes. So yes, as I said, what is started with conceptualizing the different industry accelerators is now going to the next level. While our partners have already tapped good amount of leverage on these industry accelerators, Microsoft also wanted to join the bandwagon and provide a solution which is very specific to a certain industry, and that's the reason all this endeavor of industry solution comes into picture, right? So Microsoft Cloud for different industries are coming out. We have the Microsoft Cloud for manufacturing that may come down sometime. We have Microsoft Cloud for healthcare, and something that's kind of leading the race is Microsoft Cloud for financial services, which was announced February this year by Mr. Bill Borden, and it's going to be generally available across the globe pretty soon. And I think that's announcement it's coming your way, right? So as I said, what started with accelerators is now taking the shape and form. We have been inspired by how the financial services accelerator was leveraged by our partners, and we have tried to come up with some of the industry use cases pre-built into managed solutions that Microsoft would be rolling out. That will be on top of the basic SKU licenses, right? So the typical licenses for Dynamics 365 sales, customer service, Power Platform, Dynamics marketing, or sales insights, customer insights, and so on and so forth are separate. And these specific solutions that will be brought out by Microsoft probably would be priced separately. So if some industry player is looking to get a pre-built solution, then probably that is something that would be coming out. So that's all about the specific clouds for industry by Microsoft.
Well, thank you, Akhil, and we are excited and look forward to your deep dive session on the Financial Service Accelerator / Financial Service Cloud at the Dataverse Summit next month. So we will see you soon, Akhilesh.
Yes. Yeah. Yes, right. Thank you very much, and thanks everyone for attending this session. For some of you, this may be really odd hour of the day, but thanks a lot for attending. And I look forward to meeting you in further sessions in other summits as well. Thank you. Bye-bye.
Bye.